So should we buy or sell XRP slash the US dollar? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we have the crypto here. It is 62% from the 52-week low, but we are 65% away from the highs. Here is their website, XRP, utility for the new global economy. Fast and green, the digital asset XRP was built to be the most practical cryptocurrency for applications across the financial services space. Yes, it's a nice website. But very mixed though between like here the icons are really small, but then it's like huge here. So really, what is big and what is small is a bit chaotic. But yeah, here is the chart, and we got some news. Blah blah blah. So these are weekly data points, and we go pretty far back. This crypto has been through a lot of different things. You can see that the red 200-week moving average, very important in the past. As resistance here, when it becomes support, it's very good. Fast forward, and you can see yourself, that this is such a obvious resistance level. So very easy place for the bears to short. What is a bit interesting though is that you see that we had rejection, surgical rejection last week. This week we did go down, but now the bulls are pushing us a bit up. The bulls are struggling, as you can see, with the 200 week. I mean, this is surgical rejection. But there is pressure on that resistance level. So that is interesting. If we go here to the daily data points, interestingly, the 200-day moving average is the key level here. So the 200-point moving average basically is the name of the game. Peaked a bit above, went below. We are currently actually above that moving average. So it's interesting. Let's look a bit at the RSI and the PPOs. Is it too late maybe, or I mean, so the RSI is, it has been much higher in the past. So it could be that RSI is in the process of establishing a higher level, preferably going back to to this this is 60-ish zone that it's been in before. Looking at the daily data points, you see here that RSI, it used to be higher when it made big rallies in the past. Back here, that was like the current overbought level for Ripple, which was around approaching 80-ish. But after the recent weakness, the high for Ripple has been it seems like it's around 70-ish is like the overbought level for Ripple. So yeah, the pullback is basically coming from a very predictable level. So in this case, I do write 200 weekly moving average resistance. That is like the key signal. I will actually give the bulls a 1 because they are fighting it in a very interesting manner. And also you had a breakout above the 200-day moving average. So there is some pressure here that doesn't attract bears. Bears don't feel comfortable shorting cryptos that exhibit this kind of pressure under a resistance level. And the bears, they prefer rejection and then a clear weakness, not this fighting behavior from Ripple. So let's look at seasonality to the right here. The seasonality is really good. It's super good heading into late October. So, I mean, this is October. Sounds pretty good to me. To the left here, over the last 5 years, we close higher 50% of the time. Going to 8 years, we close higher 43% of the time. And the data here in this case goes back to 2015. So October, it's not strong. It's not that weak either. November and December are messy because we only close higher 29% of the time, but the average gain is like 16% for November and 92% for December. The seasonality for Ripple was a mess. I mean, really just a mess. I'm not really sure what to do with it. I mean, it's just a bit all over the place. I think I'll give the bulls a 1, but it's very messy. I'm going to skip over the fundamentals because there are no fundamentals in the crypto landscape that predict future behavior. So in this case, we do have a 78% correlation with the S&P 500. 85% with Bitcoin, 51% with RK, the innovation ETF, Cathy Woods. Then you have 13% with the 10-year yield. Short term, we got 20% with the S&P 500, 73% with Bitcoin, 15% with RK, then 11% positive with the 10-year yield. Hence, what happens with Bitcoin is unsurprisingly going to have a bit of an effect on XRP. So here is Bitcoin on the topic of the 200-week moving average. Yeah, Bitcoin, it tried to get above it, but now it's below it. We are goofing around a bit sideways, and this is a bit dangerous. We haven't fully broken down horizontally yet, but last week we did close below a lot of key levels. So this is a dangerous place to hang out. If you are a bull, you definitively don't want this level to continue. This is dangerous, no doubt about that. On the daily data points, yeah, it's because the big problem is that we did close below what could be horizontal support, but these levels are now resistance levels. Yeah, because we were like shaping a bottom, we had some double bottoms, triple bottoms, but it didn't work out. You see here that the bears, they ferociously used the blue 100-day moving average to short. And that worked pretty well. Yeah, looking at these other indicators, yeah, I mean, we do have a MACD buy signal, but yeah, on the daily data points, we are in a messy territory. There's nothing that really is exciting for the bulls here. The bears, they haven't made that big move yet, but I guarantee you there's a lot of bulls now that have very tight stops, so the bears, they have an opportunity now to trigger a bit of a cascade. Let's compare Bitcoin with, well, Ripple with Bitcoin. That is the accurate way to phrase it. So let me draw it in. So this is a shoulder, this is a head, this is a very broad shoulder, but the right shoulder is below the left, which isn't textbook inverse head and shoulders, but it still is a bit inverse head and shoulder-ish. You could also argue that we see some kind of rounding bottom-ish behavior. That is bullish. We are seeing rejection from an RSI level that has formed rejections in the past, like back here in 2017. Ripple began to underperform Bitcoin when that happened. So there seems to be a bit of a dynamic relationship between these two. Yeah, when we go here to the daily data points and look at seasonality, yeah, this is great for Ripple. Ripple usually outperforms Bitcoin overall into late November. So I give the bulls a 5 here on relative performance. I think this is pretty interesting stuff here. So we do get the 2.3 here in favor of the bulls. We do, however, still have that 200 weekly moving average resistance to contend with. But things like, the seasonality, which was really clear when we compared it against Bitcoin, and also some of the pressure in the chart from the bulls, it's interesting. But if we do get a breakdown in Bitcoin, it certainly is going to drag Ripple down with it. Even though we have seen that there's a tendency, seasonality speaking, is that Ripple outperforms. But you can have two securities go down and if the one go down less, then it will outperform, but you will still lose. So yeah, there's that. So we have some time left, so let's run through some, other risque investments, I guess you could say, in the same sentiment. Let's look at Riot blockchain as an example. Yeah, it is emerging from a low level. It's you see the purple 20-week moving average. It's peaked above it like here and here, but just for 1 week and then give it up. So the big question is it like the two previous times, or is it different this time? That's right, blockchain. Let's look at Coinbase. Yeah, let's go to the daily data points. Yeah, it's pretty clear what's happening here. Very easy. You short the blue 100-day moving average. Usually it works out pretty well, and this week as well, it also worked out, decently. If you were to get into trouble as a bull, no, bear, you would, in this case, it did go 11-ish%, what 12-ish% against the bears. So probably some short squeeze here, but the bears just got back into it, so yeah. So yeah, the blue 100 day is very shortable for Coinbase. Let's look at Nikolai. Nikolai, it's such a long time since I looked at the chart. Yeah, new all-time low. That's clearly bearish. The interesting thing about this stock is that, let me draw it in. It seems to have established time cycles. Yeah, the time cycles differ a bit, but when the rallies come in this stock, they are a bit significant. Like this rally here, as an example, 57-ish% gain. This rally here, as an example, became 74%. So there's been some really good bullish opportunities, even though we are at all-time lows. So from like an investor perspective, obviously this is not really attractive, but from a trader perspective, this is actually very attractive because you can make big gains going long, but also shorting a stock like this can lead to big moves. Like this short here, as an example, has now offered 60%, so this is extremely tradable. Let's look at Tesla. TSL. Oh, yeah. Well, so the thing is that we did stop dead on the blue 100-week moving average. So it is an interesting moving average, but you see here that it has a messy relationship with the moving average. So I do think that it matters, but I ideally like to see a bit more squeaky clean relationship. The blue 100-day moving average actually seems to be way more tradable. So let me draw it in. Super clean resistance level, very easy to short, but also very easy to go long. It's worked really well for the bulls here and here and here. So the blue 100-day is definitively one to look at here. So forget the 100-week, focus on 100-day for Tesla. Let's go really old school and look at GE, General Electric. Yeah. We are back to some horizontal-ish level, but this also is a chart that is close to a bit of a breakdown. If we lose more now, then we could go significantly lower. Let's look at the J&J, Johnson & Johnson. Yeah, we just messy territory. We have lost support, but it's not clean. There is no clean. Yeah, you see that the stock is very erratic. So it's a bit difficult to trade because it goes up, down. Very you can see the candlesticks recently. The wicks are a bit tall and also a bit long as well to the downside. So these kinds of securities, they can really just stop out all kinds of stop levels and be very frustrating. The thing is that a security will go through different phases. Sometimes it will be very tradable, easy to navigate, but there can be times of a lot of noise. And when it happens, you don't necessarily know how long it's going to happen. That's why it is a very good idea to have a broad range of securities and stocks you want to trade, because then it is easier to avoid those times of noise and chaos. Because chaos any security can be extremely expensive because it will stop out short positions, longs, you name it. But yeah, interesting things happening here in the market. To get full access, go to diamondarm.com and get on the newsletter, and then you will be on the waiting list for when I reopen the VIP access program. It's been a bit. It's taken some time to reopen it because I'm doing a lot of stuff behind the scenes. So I am rather busy, but I definitely have long term want to have this very active because I do have plans of establishing a hedge fund and ETFs, and then I will recruit people from the pool of those who went through the VIP access program.